This is Alan Farley from FX Empire. Zoom Video Communications came public in the 60s back in 2019, traded in a fairly narrow range until the pandemic when it took off in this very, very strong uptrend that initially was very, very volatile and there was a lot of confusion about upside and downside. This finally settled out right around June. The stock took off in a multi-level, almost a five-wave Elliott advance that featured this very, very big gap at the start of September. Now, the stock posted an all-time high right around the 590 level in October, entered this very ugly correction. It's dropped about 35% now, or even more than 35%, just crossing the 618 retracement today, on its way down to perhaps a gap fill down here about the 320 to 330 level. That level has aligned very narrowly with the 200-day moving average, so it is a high odds reversal zone. However, the Fibonacci retracements tell us that we might get a little bit of stretch all the way down here to the 786 retracement. Now, that would be a very low-risk buying opportunity right around 307, because very strong uptrends rarely pass the 786 retracement without a very strong bounce. Now, accumulation has stayed very, very level, much, much stronger than the stock itself. Stronger than price, and it's holding in a very narrow range. Now, this is really good news for a bounce once we get a shakeout of the last weekend at shareholders and the stock settles out. I think we get a very magnificent bounce, probably 100 to 175 point bounce, probably up to this gap zone here between about 450 and 500. So I think this is going to be a really, really good pullback play, but you have to be patient. I wouldn't be the first one in buying a falling knife because this has already burned quite a few investors.